Now, do you see this red area here? This red area indicates that the market is ranging. Looking at our chart, we can see that yes, the market was indeed ranging as indicated by the indicator. Now, after a range, what do markets normally do? Well, they break out. This orange line pointing downward like this indicates a breakout outside of a range, and it happened about right here. Looking at our chart, the market was indeed breaking outside of this range, giving us an opportunity to take short positions. And then here, the same indicator tells us that the market may be ranging. Looking at our chart, yes, it was in fact ranging as indicated. A few hours later, it says that the market may be breaking out of this range. Looking at the chart, yes, the market was indeed breaking out of this range, giving us another opportunity to take long positions. Ladies and gentlemen, this indicator is called the squeeze index, developed by Lux Algo. It's a revolutionary trading tool that you and I can use to trade breakouts or basically take advantage of ranging markets. In this video, we're gonna combine this indicator with two other technical indicators to create a strategy that might just be the most profitable trading strategy you've ever seen. So stick around because it's gonna be a wild ride. Now, we're going to be doing this strategy on the 15-minute time frame of GBPNZD, but feel free to experiment with other trading securities and different time frames to see how profitable it's going to be. Now, as mentioned earlier, this indicator is called the squeeze index. You can type that in on the indicator search tab, and it's going to be this one right here. After adding it to your chart, you want to add an EMA. This one called Moving Average Exponential. And then the last indicator that we need is the support and resistance levels with breaks by Lux Algo. For the settings, we're not going to change anything on the squeeze index. The default settings are pretty good. But for the EMA, we're going to double click on it and then change the length to 200 because we want it to track longer term trends in the market. Now, to make it a bit brighter, you can change the color to something like white. After that, click OK. And then we also need to change the settings for the support resistance levels with breaks. You want to change the resistance color to green, make it a bit thinner, and then change the support color to red, make it a bit thinner. Then on the inputs tab, you want to reduce the left bars value to 3. And then for the right bars, you want to change it to 5. You also want to disable the show breaks option and then click OK. Now, the squeeze index by Lux Algo is a technical analysis tool designed to quantify and visualize the concept of price squeezes in financial markets. Now, a price squeeze is a situation where the price of an asset is compressed within a narrow range, indicating a period of low volatility and limited price movement. This state of compression is also referred to as a range or a consolidation. Now, this indicator is made up of very few components. This orange line traversing the indicator window is known as the PSI line, and it's used to track the momentum of the market. Whenever the PSI line is under the 80 level, basically under this dotted horizontal line, that indicates that the market is trending with high volatility. Conversely, as soon as the PSI line goes above the 80 level, a red level like this is going to be printed. This level is known as the squeeze level. Whenever this happens, it indicates that the market is squeezing, basically meaning that the market may be consolidating with less volatility. Now, looking at the settings of this indicator, we can see that we can change things like the convergence factor. Increasing this number is going to make this indicator less sensitive to price. Same thing with the length. A higher number, like 50, is going to make this indicator less reactive to price. But a lower number, like 10, is going to produce lots of squeeze levels, meaning many entries for those using this indicator to trade. But at the same time, there could be many false signals. For a balance of both, we're going to stick with 20. And then here, we can change the colors constituting the gradient of the PSI line. And then on the style tab, we can change the threshold that constitutes our squeeze level. If you want it to be at 70, well, this is where you would change that. For our strategy, we're gonna stick with 80. Now, the idea of our strategy is going to be to identify a consolidation area using this indicator, and then once the price breaks outside of the consolidation, we can take long and short positions depending on whether the market is in a bullish or a bearish trend. And we're going to be using the EMA to identify the trend. The support and resistance levels indicator is going to be used to identify the definite areas where the price needs to break before we take our positions. And we're going to go over the entry conditions in the next few seconds. But before that, let's first of all talk about the forex broker called HenkoTrade. Now, I've been using HenkoTrade for quite some time. As you can see here, this is my live account on HenkoTrade's web trader platform. The reason why I think HenkoTrade is a great broker is because of their extremely low commissions and spreads. On forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. For those of us who love high leverage, well, HenkoTrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,484.50, well, they're gonna give you a bonus of $3,484.50, giving you a total of $6,969 to trade with. To access the bonus as well as all the other perks, well, sign up to HenkoTrade using the link in the video description. Now, back to the video. Now, to take a long trade with this indicator, these are the conditions. First, identify a squeeze. For that, you're going to be using the squeeze index. We need a red area like this to be printed to indicate that the price is squeezing. Condition number 2, you want to identify and mark the most recent resistance level. For that, you're going to be using the support and resistance levels indicator. These green horizontal levels indicate resistance levels, and this is the most recent. Now, the third condition is we want the price to break out of the squeeze, and at the same time, it should be breaking outside of the resistance level. Now, to confirm a break outside of a squeeze, we're going to be using the squeeze index. An orange PSI line that's under the 80 level, like this, indicates that the price just broke outside of a squeeze. And as you can see, on the same candle, the price also broke and closed above our most recent resistance level. And this is a key point to remember in this strategy, which is a break outside of a squeeze should happen at the same time as a break above the most recent resistance level. If the price were to break above this resistance level while this indicator is still indicating a squeeze, then that entry would become invalid. Now, the last condition is to ensure that the market is in a bullish trend. For that, you just mark our most recent resistance level and you mark the breakout candle. You need all the candles inside this window to be above this white moving average to indicate that the market is bullish. All our entry conditions are met on this candle, so we're gonna enter a long position. The stop loss is gonna go under the most recent swing low, but if the swing low is too far down, well, we're gonna limit our stop loss to 0.2%. That number is gonna be indicated here. The take profit is gonna be set at 1.5 times the risk. We let this trade run and take profit. Now, to take a short position, we're gonna do the opposite of everything we did for the long position. The first condition is to identify a market squeeze, indicated by a red area like this on the squeeze index. This indicates that the market is in a consolidation phase. Condition number 2 is we're going to utilize the support and resistance levels indicator to identify and mark the most recent support level. This is going to be indicated as a red horizontal level like this. Now, the third condition requires that the price simultaneously breaks outside of the squeeze and the support level. On the squeeze index, an orange PSI line that's under the 80 level like this indicates the end of a squeeze. Now, it's important that the price breaks and closes below the support level on the same candle that shows a breakout from the squeeze. A breakout below the support level without a corresponding exit from a squeeze is going to invalidate our entry. Then lastly, we need to confirm that the market is in a bearish trend. For that, we're going to mark the most recent support level as well as the breakout candle. All the candles inside this window should be below this white moving average, indicating that the market is in a bearish trend. It's important to confirm the strength and direction of the market trend to support our decision to enter short positions. We're going to enter our short position here. The stop loss goes above the most recent swing high. And if the swing high is too far up, well, we're gonna limit our stop loss to 0.2%. The take profit is gonna be at 1.5 times the risk. We let the trade run and take profit. In summary, the squeeze index offers a quantified and visual method for monitoring when the prices consolidate into a tight range, possibly setting up for a significant directional move. Now, this indicator is going to be super important in volatile markets where manually spotting these patterns would be highly challenging. Now, remember, it's crucial to perform extensive backtesting and forward testing of any strategy, including this one, before applying it with real money. Well, that's basically everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.